developments, PUDs, single-family homes, manufactured homes, be on a permanent foundation connected to permanent utility hookups, standard sales, bank-approved short sales, foreclosed homes and real estate-owned REOs, vacant properties occupied by the seller or a caretaker. Property cannot be tenant occupied unless the tenant is the prospective homebuyer. To ensure no tenant is displaced as a result of the property purchase, the property must be vacant at least 3 months prior to the purchase offer being made. Property cannot have any deed or resale restrictions. Property requirements. The property must be located within the city of Los Angeles. To determine the property location, you may check zemas.lacity.org. Check the property address by typing the house number and street, then click go. If the property comes up, it's located within the city of Los Angeles. You can also get the census tract number, click on the jurisdictional menu, the left side page, and get the census tract number, and that'll show you. City of Los Angeles Neighborhood Info is also another website you could use. And the Thomas Guide, properties located in the white shaded portion are within the city of Los Angeles. And LAHD's list of city Los Angeles communities handout. So real quick, I'm going to show you an address using Zemas. So when you get to Zemas, usually it has you click on a disclaimer. Once you go to there, you can simply type in an address. So we'll go 111 51st Street, Los Angeles. And as you can see, this property is within the city of Los Angeles because it's all colored. If it was outside the city, it most likely wouldn't zoom into any neighborhood. You can also see the jurisdiction right here, what CD it is. It gives you all the general information, the planning and zoning, and the assessors. It gives you the assessor's parcel number and all other relative information. On our handout, we also have our neighborhoods. So these are all the neighborhoods that are within the city of Los Angeles that qualify for our program. It's definitely recommended to use Zemas to make sure, always check the property first to ensure that it is within the city. Continue. The home buyer requirements. Borrower must meet the following requirements to be eligible. Be a U.S. citizen, lawful permanent resident, or other qualified alien. Be a first-time home buyer, defined as someone who has not had ownership or interest in any real property at any time during the last 3 years. Not have any outstanding mortgage obligations during the last 3 years. Not have claimed a deduction for mortgage interest or property taxes or any real property on their federal income taxes returns for the last 3 years. Total gross household earnings must be within the low and moderate income limits as adjusted per household size. Homebuyer requirements continued. Borrower must meet the following requirements to be eligible. Occupy the acquired subject property as their primary residence. Complete 8 hours of homebuyer education and receive housing counseling from an LAHD approved homebuyer education provider. Homebuyer education and housing counseling may be obtained virtually or in person. LAHD approved homebuyer education providers. So 8 hours of homebuyer education and housing counseling must be obtained from one of the following approved education providers. So this list is also in our booklet, just for your reference. But these are the only qualified education providers that we allow because they're HUD approved. Income guidelines. The gross income of all adults 18 years or older who are part of the household must be included. The lender must project the total gross before taxes or other deductions income of the household for the next 12 months. LAHD averages the borrower's income from the 3 most current months of paycheck stubs and projects that income forward for the next 12 months. If the borrower has received a higher pay increase, the higher pay will be used to calculate and project the income. Additionally, if the verification of employment VOE form indicates a projected pay increase in the next 12 months, LAHD will factor that anticipated pay increase on a prorated basis and in its income calculation and projection. Income guidelines continue. Household size is determined by counting the borrowers and the dependents claimed on the federal income tax returns. Other household members who are not claimed as dependent on the borrower's federal income tax returns must provide supporting documentation to prove that they are part of the household. LAHD runs a credit check or credit report of all household members 18 years or older who claim not to receive any type of income. LAHD requires that these household members submit an LAHD no income certification form and credit check authorization form. Types of income that must be counted and included to be determined program eligible. Gross wages, salaries, and overtime pay, commission fees, tips, royalties, and bonuses. Net income from the operation of a business, profession, business activities, and investments. Interest, dividends, and other net income of any kind from real or personal property. Social Security, VA compensation, annuities, insurance policies, retirement funds, pensions, disability or death benefits, and other similar types of periodic receipts. Unemployment, disability and compensation, workers' compensation and severance pay, welfare assistance, alimony, child support, and regular contributions are gifts received from organizations or from persons not residing in the dwelling. All regular pay, special pay, and allowances of a member of the armed forces. Inputted income calculated on assets. Income documentation required. 3 months of current paycheck stubs. LAHD requires the following number of paycheck stubs to be submitted based upon pay frequency. Either the 3 months, bi-monthly, six pay stubs, bi-weekly, which would be 8, and then weekly would be 12. Current VOE with current and past income information. Current year-to-date accurate profit and loss P&L statement, dated and signed for self-employed borrowers. 6 months of statements for all assets. Savings, checking, CDs, money market, retirement accounts, etc. For all adult household members. Down payment requirements. LAHD requires that the borrowers.
I think that's mine.
Oh, okay. So I'm going to be handing over the contact now.
Thanks, Malik.
No
Thank you, everyone, for attending our session and making the time to do so. I'm going to go over the down payment requirements. LAHD requires that the down payment LAHD requires that the borrower contribute a minimum down payment of 1% of the purchase price from the borrower's own funds. LAHD will review the borrower's asset statements to ensure that the 1% down payment is from the borrower's own funds. Cash deposits will not be considered as source funds. Documentation will be required for account deposits from friends and family that are described as loan payments. Down payment continue. Gift funds are not considered the borrower's own funds. However, they may be included in the transaction as additional or other source of funds toward the purchase. The borrower's minimum 1% down payment requirement must be in escrow prior to submitting the LAHD loan application. The borrower may need to contribute more than 1% of the down payment to complete the purchase if all other sources are maximized and there is a shortfall of funds to close escrow. Down payment requirement continue. The 80% asset rule. Borrower must contribute 80% of all liquid asset in excess of $40,000 towards the purchase of the home. Retirement assets are exempt from this rule. If the 80% asset rule applies, the minimum required down payment will be the greater of the 80% asset rule or 1% of the purchase price. Here's an example of the 80% asset rule calculation. If a borrower has $50,000 in non-retirement liquid assets, the borrower will be required to contribute $8,000 toward the purchase of the home, as shown in the example below. So 50,000 minus 40,000 equals to 10,000. 10,000, we apply that 80% to that, it comes out to be $8,000. And that's the required borrower's contribution. Special note, the above is the minimum contribution required. The borrower has the option to contribute additional funds toward the home purchase. Maximum total contribution. The maximum borrower's contribution toward the purchase is the greater of the LAHD loan amount plus 10% of the purchase price in gift funds, or LAHD's 80% asset rule amount plus 80% of the purchase price in gift funds. For example, the LIPA loan with a purchase price of $500,000. The maximum total contribution is $211,000. So it's the MIPA loan of $161,000 plus $50,000, which is 10% of the purchase price. Gift funds may exceed more than 10% of the purchase price, provided that the combined borrower cash and gift funds do not exceed the greater of A or B above. Next slide. Liquid financial reserve requirement. Financial reserves. Borrower must have liquid financial reserve assets available for reserves after the purchase of the property for unanticipated emergencies or unforeseen expenses. The amount of cash reserves required must be at least 1 month of the total housing expenses, which includes principal and interest, insurance, property, flood, mortgage insurance premium, real estate taxes, any association dues, any private mortgage insurance. Continued. Acceptable sources of financial reserves include the following, but are not limited to checking or savings account, investments in stock, bonds, mutual funds, CDs, money market, and trust accounts. Retirement accounts, 401k, 403b, IRA, Roth IRA, that are readily available to be converted to cash, and gift funds. Underwriting criteria. Minimum middle FICO credit score required for each borrower is 660. There is no borrower's minimum or maximum for housing expense to income or front-end ratio. The borrower's minimum for total debt to income or back-end ratio is 36%, and the borrower's maximum back-end ratio is 45%. Ratios between 45.01% and 50% are allowed if there are 2 LHD approved compensating factors. Next slide. LHD debt to income ratio compensating factors. Here are the list of compensating factors if the first mortgage exceeds 45%, but up to 50% max. 2 or more of the following compensating factors must apply. Middle FICO score of 700 or higher for at least one borrower. Borrower investing more than 3% of their own funds for the down payment. Monthly debt less than $50 per month, and total debt is less than $2,500. 5 years on the same job or in the same line of work. Cash reserves of at least 3 months PITI after loan closes. And low payment shock. PITI is no more than 20% of the present housing payment. Underwriting criteria, debt. LHD may calculate debt differently than the first mortgage lender. For example, LHD will include the full amount of any collection debt as monthly payment, unless the borrower can provide proof that the collection agency has agreed to monthly payments. The monthly payment then for the monthly debt or the collection debt will be included as part of the debt collection calculation and qualifying ratios. Borrower debt cannot be paid through escrow. Proof of borrower debt payouts must be submitted before we will be releasing the check and deed of trust. So prior to close of escrow. LHD will include monthly payments of revolving debt, regardless of the remaining number of months to pay off the debt. If an installment loan has 10 months or less remaining on the loan, LHD will not count that debt. Underwriting criteria, first, mortgages. Eligible first mortgages include conventional Fannie Mae, Freddie Mac loans, affordable lending products, FHA 203B, and VA. Combined loan to value maximum is 105% for these products. Limited 203K mortgage, Fannie Mae Homestyle Renovation Mortgage, and Freddie Mac Renovation Mortgages may be used so long as the subject property meets LHD property standards prior to submitting an LHD loan application. All first mortgage types must be fully amortizing 30-year fixed rate loans. Loan origination fee may not exceed 2% of the first mortgage amount. First mortgage amount must be equal to or greater than the LHD loan amount. Here's an example of how LHD funds are utilized. This is a LIPA loan example. The purchase price is $590,000. Closing cost is $16,751. There's a seller credit of $10,650. So the total funds needed is $596,101. First mortgage is $370,000. The minimum buyer's down payment is 1%, which is $5,900. We are gonna. There's also an additional down payment of $201 that the buyer needs to bring in. There's a gift funds of $59,000. LHD will come in as the last funding source, covering closing costs of $6,101 and acquisition gap funding portion of $554,899. Total of funds available is the same as the total funds needed of $596,101. LHD's LIPA loan equals to the closing cost and acquisition portion we are covering, which in this case is $161,000. Next slide. Loan features. Deferred, requiring no monthly payments, 0% interest. Share appreciation applies. LHD loan and share appreciation are due upon the sale of the property, title transfer, first mortgage repayment, when the borrower no longer occupies the property as a primary residence, or in 30 years as a balloon payment or other repayment trigger. Refinancing for the first loan is allowed by LHD under certain circumstances. Borrower may submit a subordination request to LHD's loan portfolio unit at the listed email. Share appreciation. Appreciation is the difference between the original purchase price and the greater of the future sales price of the property, or the appraised value of the property at the time of future sales. Share appreciation is due upon the sale of property, transfer of title, repayment of the first loan in 30 years, or other repayment trigger. LHD's percentage share is the percentage of LHD's loan to the total purchase price of the property. Share appreciation, net appreciation. The appreciation amount due to LHD is based on the net appreciation, not gross. We will be applying certain credits to the calculation. The borrower's initial down payment to purchase the property, the closing costs associated with selling the property, the documented cost of any eligible capital improvements as defined by IRS Publication 523. Special note: capital improvements must add value to the borrower's property, and each improvement must cost at least $2,000 and must have a city building permit issued for the improvement. Next slide. Here is an example of the share appreciation calculation. In this example, the assumption is that the buyer purchased the property for $550,000, and in the future the property is sold for $800,000. The LHD LIPA loan is $161,000. Again, the purchase price is $550,000, so the share appreciation percentage is 29.27%. We divide the LIPA loan amount by the purchase price. The sales price in the future for this purposes is $800,000. We deduct the original purchase price. The gross appreciation comes out to be $250,000. Borrowers will receive credit for certain costs. The first one is transactional cost of selling the property. $64,000 in this case. Borrower's initial down payment, $5,500, and cost of capital improvement as defined by LAHD, $10,000. So the total borrower's credit is $79,500. LHD's net appreciation amount is gross appreciation minus the credit. Net appreciation comes out to be $170,500. This is where we apply the share appreciation percentage of 29.27%. Amount due to LHD is the LIPA loan of $161,000 plus the total share appreciation of $49,905, which comes out to be $210,905. LIPA and MIPA property inspection guidelines. The city will not always inspect the properties. The city will only perform inspections on properties if required by the underlying funding source for borrower's purchase assistance loan. Often, those purchase assistance loans funded by the federal home program will require an inspection. Due to the current LIPA and MIPA program funding sources, LHD will no longer inspect properties applying under these programs. To ensure the borrowers can access the conditions of the property they are purchasing, the LIPA and MIPA program requires the borrowers obtain their own home property insurance report, thoroughly read and review their home inspection report, submit a receipt of payment for the home inspection report to LHD as part of the LIPA or MIPA program loan application package. I saw a question: will we be reviewing the home inspection report? No, we only need the invoice receipt of the home inspection. We were not going to be doing any review of the home inspection report. Next slide. LIPA and MIPA requirements. All LIPA and MIPA purchase agreements must have the proper contingencies, including but not limited to the following items. All properties must undergo a termite inspection, and all Section 1 items must be cleared. This is important because I get this pretty much every so often. Do we require a termite inspection report? Yes, even if both seller and buyer waive the right to an inspection report and clearance. All properties must have basic home warranty coverage in order to meet LHD contingency requirement, contingent upon receiving city financing. Basic home warranty protection coverage. LHD requires that all home buyers obtain a 1-year home warranty obtain a 1-year home warranty protection policy from a home protection company licensed in California. The insurance must provide standard coverage and also cover the following items at a minimum: water heaters, heating, air conditioning, oven, stove, range. Payment for the home warranty must be contained in the final escrow closing statement, and a copy of the warranty declared page must be provided as part of the closing documents to LHD. Okay, next I'm going to hand it over to Tim.
Thank you, Compact. Lender participation guidelines, how to become an LHD participating lender. That's why you guys are here today. You have to attend an LHD lender training session. After attending, the lender is eligible to submit loan reservation requests and loan applications to LHD on behalf of eligible homebuyers. A lender must fund at least one LHD homebuyer loan within 6 months of attending the lender training session. Otherwise, the lender will become ineligible and will have to attend another LHD training session. How to be placed on the published list of LHD participating lenders. Once a lender funds or closes at least one LHD homebuyer loan within 6 months of attending the training session, the lender will be published on LHD's list of participating lenders. LHD's current published list of lenders is posted on LHD's website and is printed on promotional written homeownership materials. To remain on the published list of participating lenders, a lender must continue to fund/close at least one LHD loan within 6 months from the revision date of the new list. Generally, LHD updates its published list of participating lenders monthly. We usually do it towards the beginning of the month, and we go back 6 months and we run a query of just to see which lenders funded loans during the previous 6 months. So again, just because you attended training today, you're not going to be on our published list right away. I get that question all the time. Lenders will email and say, hey, I attended your training last month or last week, and my name's not on the list. Exactly. You have to close a loan first with us to get on that list, and you won't get on that list until we run our next update, which is usually at the beginning of each month. So let's just say you're new to our program and you were to close a loan with us, today, and you wouldn't immediately be placed on our published list. You'd have to wait until we run our next query to get on the published list of participating lenders. So just keep that in mind. Next slide. Participation guidelines continued. How to become an LHD most active lender. To be placed on the most active lenders category of the published list of participating lenders, a lender must fund or close at least 3 LHD loans within the last 6 months from the revision date of the new list. Most active lenders are specifically denoted and distinguished by LHD on its published homeownership materials and website. So on our published list, we have 2 categories. We have the most active, which is at the top, and then we have participating lenders at the bottom. To be a participating published lenders, you have to close at least 1 or 2 loans during the previous 6 months from when we run our query. And to be an active lender or most active lender, you have to close 3 or more loans during the previous 6 months. So just keep that in mind. To remain on LHD's most active lender list, a lender must continue to fund and close at least 3 loans during the last 6 months from the revision date of the new list. Reservation and loan process. Borrowers pre-approved by an LHD participating lender for the first mortgage and the Life of MIPA program. Borrower hires a licensed real estate agent and searches for an eligible property in the city of Los Angeles. Once an eligible property is located, the borrower negotiates the purchase of the property with the proper contingencies. Modified loan reservation system. Due to limited resources, LHD has implemented a modified loan reservation system and will accept new loan reservation requests for new purchase transactions on the dates listed below, starting at 9 a.m. Pacific time. Our next one will be will be Wednesday, September 10th, for 18 MIPA reservations, and then November 12th for 18 LIPA reservations, January 14th, 2026 for 18 MIPA reservations, March 4th for 18 LIPA reservations, and June 10th for 18 MIPA reservations. We only accept reservation requests on those dates for the type of program that we specify. For instance, the next reservation date is next month on September 10th, and will only be for MIPA. If you submit a LIPA loan reservation request on that date, it will not be considered. We only accept the reservations on the date specified, beginning at 9 a.m. Pacific time, and it's only for the program which we note here. Okay, so keep that in mind. And next slide. Loan reservation loan process continued. Loan reservation requests must be complete with all required attachments, including all counteroffers to the residential purchase agreement, and emailed to our email address. The loan reservations will be issued on a first come, first served basis until the last eligible loan reservation is accepted. There will be no wait list. Reservation requests will be accepted in the order they are received by us from our email account. Reservation requests submitted before 9 a.m. or on earlier dates will not be accepted. LHD will use the timestamp from our email account, not the lender's timestamp. So if you send us an email, say, look, it shows I sent it at 9, but we received at 8:59 a.m., we will not accept it. We go by the timestamp on our email address. Additionally, every loan reservation email submission request may only include one unique purchase transaction. A loan reservation submission email request cannot include multiple purchase transactions. LHD reserves the right to modify the loan reservation schedule as needed. Reservation loan process continued. When the seller accepts the borrower's purchase offer and the California residential purchase agreement is fully executed by the parties, the lender submits a LIPA or MIPA loan reservation request to LHD with the following items: the LIPA or MIPA loan reservation request form, a fully executed residential purchase agreement, LHD's LIPA or MIPA loan worksheet, proof of borrower's down payment funds, the borrower's 3 FICO credit scores, the LHD loan disclosure statement form, which Malik, if you bring that up, we'll go over that now. Okay, this is one of the forms they submit for the reservation. It's the loan disclosure. So you're gonna put in the borrower. So put John and Doe. Put in the property address. You put our work address in, 444 South Flower Street. Put in the full address, Los Angeles, California, zip code. Okay. And then you click whether it's LIPA or MIPA. So we'll say MIPA. And then just let them know what the loan amounts are, the loan terms, the interest rate. Let them know that it's 0% unless they're in default, then it could be a 15%. But as long as they're not in default, there is no interest charge on the city loan. Okay. Next page. Loan terms, let them know there are no monthly or annual payments required for the city loan. It does let them know that the city has shared appreciation on the loan. There's no amortization schedule because there's no monthly payments required on the loan. Prepayment penalty, there's no prepayment penalty. So if they want to pay the loan off early, they can do so. It lets them know that the city loan is a balloon payment and it does become due when they sell the property or in 30 years, or if there's some other event, a default, which causes the loan to be due before the 30 years. But yes, it is a balloon payment. This just gives you an example of how shared appreciation works. So if you want, you could go over this with the home buyers. We also have samples in our booklets, which you guys will be receiving. It's also on the website. Keep going. And then, just this is an example of how share appreciation works. Hazard property insurance just lets you know the property has to have all necessary coverage at all times on the property. Flood insurance, if it's in a flood area, it has to have flood insurance. Estimated closing costs, there are no closing costs charged by the city for the loan. I'll go back up. We do require title insurance for the loan, so we just give an estimated cost. It was about $600 for the city's loan. Usually it's less, but we just put an estimate of $600. So our loans do require title insurance, as our deeds do get recorded. Keep going. Lets them know about refinancing. We allow a cash out and a no cash out refinancing, and gives them the guidelines there for those refinancing guidelines. Keep going. Okay, so here on bottom page 7, when you're filling this out, what you're going to do is you're going to put in what the payment amount would be for the amount of city loan you're applying for. So for instance, let's say you're applying for the MIPA reservation for the next round. You would put the payment amount here as if someone was going to be making monthly payments on the $115,000 using the city or using the interest rate from the first mortgage. Okay, so in this example, okay, let's say they're getting a $115,000 loan, and they're getting a, let's say it's 6% is the interest rate. Okay, so the payment amount you would put in there would be $689.48. Okay, at 6%. So again, it's the amount, it would be what the payment amount would be for the city loan. If, just to give a home buyers an idea, this is what you would be paying monthly if you're getting a typical second mortgage where required monthly payments. So that's the amount that you're putting there, not the amount of the first mortgage, not the amount that they're qualifying for. It's what the payment amount would be if they were making payments on the city loan. Okay? And then the buyer sign and date the form at the bottom. Okay, if they handwrite, if they sign their name, handwrite signature, then the date also needs to be in their handwritten date. It can't be you type in a date, but they hand sign the form. And we expect that the signature and the date is done by the home buyer, not the home buyer signed it, and then you realize they forgot to date it, then you add the date. So it has to be done in the home buyer's own writing. Or if they use, you have them electronically sign it, that's fine. Just make sure to also attach the signature certification form with the document. So we know that they did sign and date the form. Back to the training. Okay, reservations are issued on a first come, first served basis. For new construction properties, after the certificate of occupancy is issued, a loan reservation request can be submitted along with a copy of the C of O. Reservation loan process continued. LHD issues a loan reservation, which is valid for 30 calendar days. I mentioned earlier, this is a change. It used to be 45 days. It is now 30 days. Since we no longer inspect properties, we figure 30 days should be enough time for lenders to submit a complete application to us. Once LHD issues a reservation, a lender will have 30 calendar days to submit a complete LIPA or MIPA loan application package with all attachments to LHD. Should the 30-day expiration date fall on a non-city business day, the application is due on the preceding business day. So keep that in mind. Let's say you have a reservation and the expiration date is Monday, September 1st. Well, that's Labor Day. So you would have to submit the application on the prior business day, which would be August 29th. So just keep that in mind, okay? If your reservation happens to fall on a non-city business day, it is due the prior business day. LHD does not grant any extensions and does not offer funding for any property without an active and valid reservation. So in that example, let's say you submitted your reservation request to us on September 2nd. The homebuyer would no longer have those funds available as the reservation would have expired. So just keep that in mind. When we send you that loan reservation form, we give you the expiration date. So just keep track of that reservation date. Maybe mark it on your calendar as a reminder that, hey, the city loan is due on this date. Okay. The loan reservation is issued for the specific borrower and subject property. If the transaction is canceled for any reason, the loan reservation may not be transferred or switched to another property or borrower. Reservation loan process continued. If the lender fails to submit all deficient items within 2 weeks from the initial loan deficiency date, LHD reserves the right to cancel the loan application. When all deficient items are subjected to LHD by the lender, the loan application is considered complete and is routed for approval. LHD's loan approval letter is emailed to the lender approximately 1 week after LHD receives the complete loan application. LHD continues to process the loan, which includes scheduling a loan signing appointment with the borrower at LHD offices. The city's funding check is issued approximately 3 weeks after the LHD loan approval letter has been sent to the lender. Important note, the total estimated processing time to fund the transaction is 4 weeks from the date a complete LIPA MIPA home buyer loan application is received by LHD. It's not a 3 or 4 weeks from when you submit the application, but 3 or 4 weeks from when we consider, 4 weeks from when we consider the application to be complete. A loan application is considered complete when all of the LHD deficiency items have been submitted and cleared by LHD. So again, from when we get a complete application until we get the funding check, it's approximately 4 weeks. Emailing us after the buyers have signed the loan docs to find out the check's going to be sooner, or if we've gotten the check, it does not speed up the process. We expect that you guys are patient. We do our best to try and get the checks out before 4 weeks. Myself, Malik, Compact, we all try and get them sooner. We do what we can, but once we submit a reservation request to our county, there's other units and other departments that also have to process the disbursement request. So certain things are out of our control. So we do ask you to be patient and keep in mind, it is 4 weeks from when we get a complete application. Next. Loan application submission guidelines. Electronic loan application submission guidelines are below. Electronic signatures from borrowers will be considered valid and accepted on all LHD application forms requiring signatures. File format and naming convention. Each requested item on the LIPA or MIPA loan application checklist must be submitted as a separate PDF document. Name each PDF document with a unique identifier, including the corresponding item number. Example given, number 2, LHD loan worksheet. So what we're referring to here is on the application, on the cover sheet or front page of the application, we have a checklist of the items which are needed for the application. Each item has a number next to it. When you submit the application, you're submitting the items, you need to number them to match the numbers from the checklist. Additionally, please save all 6 months of each asset type as a separate PDF per borrower in ascending or descending chronological order. For example, if borrower 1 has 2 checking accounts, those 2 checking accounts should be saved and correctly labeled as 2 PDF files with all 6 months of statements for each checking account in order. If that same borrower also has a savings account, that would be another separate correctly labeled PDF file. Also, for transactions that have multiple borrowers, please group the asset categories by the borrower. Example, number 19, checking John Smith, and number 19, checking Jane Smith. Now, if those same 2 borrowers have a joint account, you don't have to submit that twice. You would just have to submit it one time. But if you have 2 borrowers and they have separate checking accounts, each one needs to be its own separate PDF. Paycheck stubs for each borrower also need to be in order in one PDF file for each borrower. Legibility and readability. It is essential that all PDF documents are legible and readable. Please ensure that the scanned or digitally created documents maintain a high level of clarity to facilitate the review process. Zip file submission. To minimize submitting multiple emails as part of your loan application submission, we kindly request that you save all separate PDF documents in 1 or 2 zip files. This will help streamline the submission process, ensure that all documents are received together. Please note, hard copies of loan applications and attachments will no longer be required nor accepted. Loan process continued. Prior to LHD releasing its funding check to title escrow, LHD requires the following items from escrow: evidence of property insurance listing the City of Los Angeles as a loss payee, the most current estimated closing cost statement, evidence of home warranty coverage, executed page 5 of LHD's escrow lender instructions, completed termite report with all Section 1 items cleared. As Compact mentioned earlier, we still require the termite report and clearance. Even if it was now required as part of the residential purchase agreement, we still require it. So now we'll go over a MIPA worksheet, give you guys an idea of how it works. So if you could bring that up, Malik. Yeah, so if you go to the top, so you're gonna put the applicant's name and put John Doe. You're gonna put the household size. Let's say for this example, it's household size of 3. You're gonna put in what you're projecting their annual income to be, not what the underwriter is using, but what the projected income is going to be. So we'll say 130,000. The appraised value, let's say it's 575,000, and the purchase price also 575,000. Closing costs, we'll say 23,000. And let's say they're getting a credit from the seller. You would list that here and make sure you list it as a negative number. Because if you don't, then it adds to how much funds are needed to close. So let's say it's a $2,000 credit. So the total funds needed for this transaction is $596,000. It automatically calculates the 1% down payment requirement, which is $5,750. If the buyer is putting any additional funds, or if the 80% asset rule applies, you would list that there on the line below that. Okay, they're going to put in the monthly income per the first mortgage underwriting. So this is what your underwriter is using. This should be the income from the 1008. So in this example, we'll say it's $10,000. And we'll start with the back-end ratio of 42%. And the monthly debt, we'll list it as $425. Again, listed as a negative number. Mortgage insurance, we'll say it's $250. And the HOA, say it's $375. And the interest rate we're going to use is 6%. So it goes through the calculations, let you know the maximum first mortgage they could qualify for is $425,400. With the home buyer's contribution, the total funds available would normally be $431,150. If you scroll down, Malik. Their purchase gap need is $143,850 plus $21,000 for closing costs. So their total gap in closing cost need is $164,850. However, the maximum they could get for the MIPA program is $115,000, leaving them with a shortfall of $49,850. So what they already do, go back up, and if you change the back-end ratio, let's change it to 44%. Let's scroll back down. You'll now see the first mortgage increase to $458,800, and now the shortfall is $16,450. Say, well, I could keep going up. I go up to 45%. They don't have any compensating factors, but 45% is the max. Now the first mortgage amount is $475,500. The LHD loan amount would be $114,750. There's no shortfall. The loan to value does shows 82.7%. That's why I went ahead and included the mortgage insurance up top. So this kind of gives you an idea of how the worksheet works. It's really simple. You fill in the shaded sales and the program does everything else for you. Go back up a little bit, Malik. And let's say on grant funds, put down where it says grant funds. Let's say they're getting grant, just put, LHD. If they're getting like a $10,000 grant from somewhere, and then you put in the amount right there. So any kind of grant funds, you put in there. If they're getting other loan funds, if they're getting CalHome funds, which will be in a third position, you would put that under other loan funds. So anything that's in the shaded cell is what you fill in, and the worksheet's going to do everything else for you guys. Okay.
Hi, Tim. Can I ask a quick question? This is
Not
Virginia
right
at
now.
NECA. Not right
No,
now?
not right now.
Okay.
Sorry.
Understood.
Okay. Malik, if you go back to the next slide. Where to get more information. Refer to our handouts. We'll give you our website, our phone number, our general line phone number, and then our email addresses. The best way to get in touch with us is through email. It's the quickest way for us to get a response. Malik, I'm going to turn it to you. He's going to answer a few questions that were done through the chat. If we don't get to your question today, Malik will send out a follow-up email to everyone with the questions, which he will be answering, which we didn't answer today. So Malik, if you could get to those.
Okay, thanks, Tim. So we're gonna go ahead and look at a few chat questions. Let's see. If you do have a question, please type it in chat. What if the original borrower passed away? Will the person inherit the property that needs to pay back the city?
For that, they would need to contact a loan servicing unit, which we provide that email address, and they would let them know what the procedure is for that. So again, all loan servicing questions is handled by our loan servicing unit, so they would need to contact them and they would let them know whether it was due at that time or not.
Do you allow non-borrowing spouses on your loans if the buyer is married?
Non-borrower. So I'm assuming they mean if they're going to be on title. Yes, they could be on title and not be on the first mortgage. However, keep in mind, if they are on title, we consider them to be a borrower and they have to meet all of our borrower requirements, including FICO scores, citizenship requirements, attend home buyer education. They have to meet all of our borrower requirements. Anyone who's on title has to be or meet our borrower requirements.
Okay, next question by Gina. Will funds and stocks be exempt from the 80% asset rule?
I'll answer this one. No, they are not. Stocks are considered liquid assets and they are considered as part of the 80% asset rule. So if someone has stocks, those are considered liquid assets and those get counted towards the 80% requirement. Let Compact take the next couple.
Okay, this is from Virginia. Our program is very similar to LHD. We go in second position. Would LHD go in third position?
So no, we usually go in second position unless there's usually it's only on second position. That's our loan position.
Understood. Thank you.
Let's see, Leo. Do you allow non-occupying borrowers?
No, we don't. All borrowers has to occupy the property. So occupying borrowers or co-signers are not allowed.
We're gonna do two more questions. Let's see. Who must pay for Section 1 of the termite report?
That does not matter to us who pays for it. If the buyer's paying for it, we do not allow it as a closing cost, so it has to be from the buyer's own funds. In addition to their down payment requirement, city funds cannot be used to pay for the termite, any termite inspection reports or for the work itself.
Okay. A lot of you are asking if we're going to get a copy of your presentation. Yes, you are. We're going to email that out either today or tomorrow. So please be patient with that. And I'll do one more question. What is considered as a qualified alien from the qualifier borrower requirements?
Malik, could you repeat that again?
What's considered as qualified alien from the qualified borrower requirements?
So we have a form that the buyers fill out and sign. It's called a declaration of citizenship form. And on that form, there's a list of documents or I guess items which would qualify someone. So you'd have to go through that form and see if the buyer has whatever documentation they have, if it matches exactly to the list of acceptable items on that declaration of citizenship form.
Just going off of that, I know a lot of you ask if DACA status people are eligible. They are not, just to clarify. And that's it for all the questions. If you do have further questions, please feel free to email me. And that's it. Thank you for attending.
Oh, sorry. Great. Thanks, Malik. Thank you, everyone, for participating in today's lender training webinar. We appreciate you being here and for your time. Please be sure to check your email inboxes for a follow-up email from me that will contain the program applications, forms, worksheets, along with a PDF version of the training slides. Do not email us asking when you will be getting the email, as it will be sent within the next couple of days. Again, thank you for joining us today, and we look forward to working with you and assisting low and moderate income first-time home buyers. Thank you.
And there's my email, so feel free to take a snapshot. Used as first mortgage principal reduction. Property requirements, eligible properties, 1 unit properties only, condominiums, townhomes, or planned unit